Welcome back to Fast Market, everyone. Kevin Hinks, Alex Coffey. Now it's time for our cash tag segment. Now I want to bring in the Vice President of Research at Likefolio.com, Miss Megan Brantley, to the show. Megan, we're covering Nvidia. It's a fun topic on a day like this. And actually, we could turn this into the Nvidia show if we really wanted to. But I looked at your charts, and one thing comes out to me, and that is powerful that Nvidia has going on right now. Give us your interpretation of the Likefolio data.
You know, whenever we look at NVIDIA, and I feel like we've been saying this for some time, this company is best of breed in its space, but it's also best of breed just among innovators, even outside of when you think of AI. You know, whenever we look at different tailwinds, it's almost a matter of, you know, pick your favorite tailwind for NVIDIA. Is it autonomous driving? Is it robotics? Is it, you know, this massive transition of data centers into this advanced computing, what they call AI factories? I think this is driving a lot of interest in NVIDIA and its technology. And honestly, from what we're seeing, it's that demand is so high, we're not sure NVIDIA can even keep up. And so I think that that is the story. It's a great spot to be if you're NVIDIA. And this, you know, whenever we break this down for leaders, you know, I think AMD could be a close or a second place, but I'm not sure that it's even close to NVIDIA, and we're still bullish on AMD. So I think that, you know, whenever we look at NVIDIA right now, we see it trading, I think it's down over 20% from June highs. You know, whenever we see pullbacks like this, historically, these are gifts to long-term investors.
And Megan, when you kind of put that into perspective with the fact that it's been such a busy week in the market, we've heard from so many of its peers and kind of customers over the last few weeks. Really, the only thing missing from this week, I think, would have been NVIDIA earnings. Then I don't even know what would have happened. But we get a little bit of a glimpse into that demand still being there because these hyperscalers keep talking about spending money. You don't have to think too hard to figure out where they're spending money at. Is that showing up in the data as well when you're seeing kind of excitement around visits or capex around NVIDIA?
Yeah, so whenever we can look at both of these things, I think those are the two charts we'll look at today. Whenever we look at web visits, they're at highs. We see a lot of people who are still engaged, still exploring NVIDIA products. This is a good sign from us for future growth. And then whenever we look at capex spend, it's really tremendous. And we actually see signs, and from what we've listened from NVIDIA's customers, whenever you think of names like Meta and Google and Amazon, you know, we see this spend accelerating in the second half of the year and even into 2025. You know, the chart right there that you're looking at, the capex spend, this was before Amazon released, and I think that its capex spend was even higher than people estimated, over 16 billion. And it said, you know, we're investing a lot in AI, and so I think that this strength, it was even more powerful than people even were estimating heading into this report, and they knew that it was going to be strong. I think the spend was so high, it actually hurt the stock a bit. It hurt Amazon. But this translates to considerable demand for NVIDIA. We also saw AMD come out with a nice report, strong demand for its AI products. And so we know that, you know, NVIDIA is the leader here. So you can only imagine what demand looks like moving forward for this company. So, you know, while there may be questions of supply and, you know, how it can step up to meet this growing demand, how long can it sustain this exponential growth, but all metrics that we look at suggest that, you know, growth will continue to be exponential, that, you know, NVIDIA looks poised for another record-breaking quarter, and we're about a month out. So it's kind of nice whenever you look at this environment right now. We see this as a nice opportunity, especially for long-term investors, with a little bit of near-term weakness alongside the market at large and what we expect to be a really, really nice report in about a month.
For the previous few days, NVIDIA's stock has fluctuated up and down, mostly in response to changes in the markets. The Federal Open Market Committee, FOMC, meeting on Wednesday gave it a boost when the Fed said that it was moving closer to lowering the federal funds rate. Microsoft also gave NVIDIA good news, as the business revealed on Wednesday that it is raising its AI infrastructure investments. The revelation served as additional support for NVIDIA's stock, since the company is a significant supplier of AI technology to Microsoft. Meta Platforms, a significant NVIDIA client, recently announced plans to increase its AI spending, not only for this year, but also for 2025. But some depressing economic news on Wednesday afternoon overshadowed Meta's positive AI news. This week's numbers for unemployment claims exceeded forecasts, while the manufacturing index, a measure of American industry, came in below projections. Since all of the main indices were down on Thursday, most stocks, including Nvidia, were negatively impacted by these indications of a possible slowing economy. We won't have growth figures until August 28th, when Nvidia reports its profits. However, NVIDIA's growth has not been a problem. The company's profitability are increasing. Revenue reached a record $26 billion in the first quarter, up 262%, and earnings per share shot up to $5.98 per share, up 629%. Nvidia predicted revenue of $28 billion for the second quarter, which would set yet another record. Analysts are predicting revenue of $28.4 billion. With rival AMD's chip division already reporting impressive Q2 results, with Microsoft and Meta predicting increased investment in AI, Nvidia ought to have yet another stellar quarter. However, with Nvidia, one of the stocks that has grown the quickest over the last 2 years, growth isn't the issue. Rather, its value is. Whether you choose to invest in Nvidia directly or through an exchange-traded fund, ETF, it is a fantastic company and one you should have in your portfolio for the long run. Investor attention has been particularly focused on big tech's capital expenditures throughout this earnings season. This investment is thought to be a measure of how optimistic Microsoft, Amazon, Meta, and Alphabet are about the potential benefits of artificial intelligence. It's a little more complicated than that, though, as Julie Hyman noted on Thursday, since they have to put everything on the line to even be seated at the table. However, because of the dynamics of the supply chain, what accumulates and melts in the mountains flows into the rivers and lakes, and big tech is still making it rain, as the chart of the week demonstrates. And the lake is Nvidia. With all these developments under consideration and analyst predictions, we'll talk about target projections and advice in today's video, so make sure not to miss out. However, before you do, if you'd like to stay up to date on Nvidia's most recent updates and the most recent news from the stock market, you can subscribe to our channel. We publish daily updates about the biggest shifts in market catalysts, so click the bell icon button to ensure you don't miss the most recent updates. All right, back to today's video.
Let's turn now to a big story here this week. We're taking a closer look at the tech trade. Nvidia is the next big test for the market when you take into account earnings. But as it stands right now, you've got to look at the moves that we've seen in Nvidia today and this week. Taking a look at today's moves, you're looking at another day of losses, off nearly 7%. As it stands right now, when you take a look at tech overall, the NASDAQ 100 is down more than 5% this month, meaning that August is already tracking for the worst month of the year. And we're only in day 2 of the trading day here for the month of August. So here to discuss what's ahead for tech, we want to bring in Ayoka Yoshioka, Senior Portfolio Manager at Wealth Enhancement Group. It's great to have you, Ayoka, and thanks so much for taking the time to join us here this morning. I'm curious, we can start with Nvidia, because that certainly has been a wild, volatile ride here this week. I think the initial read on some of these big tech earnings reports was that the spending that's planned here for AI, that is actually viewed very positively here for names like Nvidia. But since then, we've seen some selling action. So I'm curious what your big takeaway from this week's crazy week that has been is so far.
It's been definitely a much more volatile week than we are used to in markets. But we, started, I think, July with the VIX at 12. And so, perhaps markets were a little bit complacent, going into earnings season here. And so, now that we've had a good look at many of the tech earnings, we did see that spend and most likely going to Nvidia for their GPUs. However, sentiment and the earnings bar was very high going into earnings season. And I think you're seeing a lot of that sort of come out just because expectations were very high. And the reports were okay, but nothing great.
Is any dip that we see in Nvidia still a buying opportunity?
So I think with Nvidia, you have to be patient, and you don't have to go all in right here, right now. When momentum starts to roll both on the upside as well as on the downside, it tends to continue a little bit. So for investors, we think you should get comfortable with some of the volatility. If you don't like seeing the stock down 6 to 7% on a daily basis, it shouldn't be something that you should put in your portfolio. However, the long-term aspect, and again, depending upon your time frame, it could be a great opportunity simply because AI has very long legs, especially as so many companies are investing in what the potential could be with AI.
Based on estimations provided by Bloomberg and quarterly reports, Nvidia's revenue is primarily derived from 4 well-known stocks within the Magnificent Seven: Microsoft, Meta, Alphabet, and Amazon. The largest transfer comes from Microsoft, whose expenditures make up 19% of Nvidia's total revenue. The world's most valuable company is Microsoft. With this, the company's largest client by far, triple that of Alphabet and Amazon, and nearly doubling that of Meta. Furthermore, according to statistics from Bloomberg, Nvidia receives 45% of Microsoft's capital expenditures, whereas the chipmaker only receives 15% of Alphabet's investments. For instance, this data serves as a reminder that in the AI jungle, chipmakers take the lead in eating, well before hyperscalers are able to provide investors with much more than mere clues on when their investments in AI would start to generate revenue. Nvidia's stock performance has been astounding as a result of the company's triple-digit earnings growth. Over the last 5 years, the technological giant's shares have increased by 2,500%. Additionally, despite a recent slowdown in price performance, shares have still increased by roughly 120% since the beginning of the year. The explanation for this rise is straightforward. Nvidia has established a strong presence in artificial intelligence, AI, one of the fastest growing areas in the world today. The company's outstanding graphics processing units, GPUs, have allowed it to command 80% of the market for AI chips. Important AI operations like training and inferring large language models, LLMs, are powered by these CPUs. Some investors are now speculating as to whether Nvidia's greatest growth wave is finished, as other chip companies introduce products to compete with its flagship chip. However, I believe that something specific, which is almost here, will be Nvidia's greatest growth engine to date. Now let's learn more. First, a brief overview of Nvidia's journey thus far. The business was a major player in the video game industry a few years ago because its GPUs allowed gamers to experience games as if they were real. So what does this really mean for Nvidia's stock? Let's find out, but first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button, subscribe to the channel. This goes a long way in helping us grow. That said, back to the video. AI remains worth watching segment for global investors in 2024. But how do you keep up with the AI sector and others that you may be interested in? I recommend trying Moomoo, a sponsor of today's video. Some features to discover stocks with investment potential has blown me away. You can use the industry chain to find companies throughout the entire AI sector, or use the stock screener to filter stocks according to your investment strategy. Having the option to set parameters like industry, market indicators, financial indicators, technical indicators, and more. Ultimately, discover potentially undervalued stocks and those that appear to show buy signals to help inform your strategies in an effort to capitalize on AI-related opportunities. At the same time, Moomoo is one of the cheapest trading platforms I've found. It offers zero commission on stocks, options, and ETFs. After comparisons, I've discovered the fees are among the lowest. Right now, new users who open an account using my link and make a qualified deposit can get up to 15 free stocks, enjoy a limited time 8.1% APY on idle cash for 3 months, and earn up to $300 cash reward for transferring in their portfolio. These rewards can be earned together, so don't miss out. And thanks again to Moomoo for sponsoring this portion of the video.
Capital spending chart is the key chart here today because the market's having a tough week. And for companies like Amazon down today and Alphabet, that was down. The reasons they were down was their capital spend. And Meta basically came out and reinforced how much they're going to spend. You've got Microsoft also on your chart. However, in a bumpy week for the market, the data going towards Nvidia couldn't be stronger. This is basically like saying, you know, I've got a cheeseburger that helps you lose weight, and I'm the only one that has it. And so everyone's going to want the cheeseburger. That's what Nvidia has, basically, right?
Yeah, and you know, whenever we listen to people talk, you listen to Zuckerberg talk, you listen to Anthropic CEO talk, that the necessary amount of computing, that resources, grows exponentially with each successive AI model. So we're talking exponential growth moving forward as you know, the technology and the power of AI just continues to compound. And so I think that this is something that we're still in the very early innings. And right now, NVIDIA has a really nice lead. You know, NVIDIA is almost like Katie Ledecky in the Olympics pool, right? She's so far ahead, you can barely even see competitors in the screen when she finishes the race. That's NVIDIA right now. That's not to say that it can't change. We certainly like AMD as well. We see this as, you know, AI is a rising tide that's lifting several ships, but right now it's definitely positioned to seemingly lift NVIDIA the most.
Megan, when you talk about early innings of the game, is the risk to this particular company in Nvidia, doesn't seem like the lack of demand is there now, but is the risk the game getting a rain delay or something if we do have a recession, that these companies are forced to pull back, or do you find that the greater risk is that there isn't consumer interest in the AI the way that the hype kind of suggests that there will need to be? Because NVIDIA is not priced for a couple good quarters. It's basically priced for this this excitement to basically happen into perpetuity at the rate that it is.
Yeah, I think that you're exactly right. Right now, our camp says that, or in research that we're looking at and what we're betting on, we see this as continuing into perpetuity, as you mentioned. But I think that there certainly, obviously, is risk near term for, you know, some market weakness at large that may make NVIDIA shares a bit volatile in the near term, but especially if we see large-scale pullbacks and things of that nature, at least over the next year or so, we're certainly buyers of this name. Obviously, it's hard to project out. I mean, can you even imagine in 2 years what technology will look like and what the AI landscape will look like? That it's tough to wrap your brain around, but for now, NVIDIA is the clear leader, and it's one that we're certainly not betting against.
Yeah.
However, it soon became apparent that NVIDIA's GPUs may be useful for a variety of applications across industries, most notably AI. Choosing to concentrate on this rapidly expanding sector, the tech company created GPUs for developers of AI platforms. Moreover, NVIDIA expanded beyond GPUs. The business is the go-to source for premium chips and more, since it has created an entire ecosystem of goods and services for AI. Key clients include industry titans like Tesla and Meta Platforms. Elon Musk, the CEO of Tesla, expressed his immense admiration for NVIDIA's hardware capabilities and execution on the company's latest earnings call. Furthermore, we are observing that there is such a huge demand for NVIDIA hardware that obtaining the GPUs is frequently challenging. Thus, it's evident that NVIDIA's expansion is still ongoing. Can it, however, really become stronger? In my opinion, yes. And the business's impending introduction of the Blackwell architecture and chip may be the catalyst for this next phase of even greater expansion. 6 revolutionary technologies are included in the Blackwell architecture, which contains the most potent processor to date, as well as characteristics that provide enhanced security, dependability, and data analytics capability. NVIDIA stated in its first quarter earnings report that Blackwell was in full production, with plans to launch it globally later this year. At that moment, the business stated that demand outpaced supply, echoing recent remarks made by Elon Musk regarding NVIDIA GPUs. As for next year, NVIDIA anticipates this trend to continue. Nevertheless, NVIDIA is always striving to make its GPUs available to individuals who require them. CEO Jensen Huang has underlined how challenging it is to meet a need this great. All of these indicates that NVIDIA's expansion is still ongoing, and the fact that Blackwell provides such performance enhancements, enabling businesses to execute generative AI on LLMs at up to 25 times lower cost and energy consumption than its predecessor, for instance, indicates that growth may be about to take off, According to Wang at Nvidia, the business anticipates a significant amount of income from Blackwell this year. However, given Nvidia's history and the impending release of Blackwell, this pricing seems sense. If Nvidia's stock doesn't jump up right away, there is obviously plenty of room for long-term growth. Blackwell, in my opinion, will be crucial to Nvidia's next phase of explosive development. Thus, it may be worthwhile to hang around or take advantage of the current drop in the stock price to profit from this fascinating tale. With all of these considerations, Nvidia is unquestionably a great buy, especially if you're looking to invest for the long term because the company hasn't reached its full potential yet. What do you think about Nvidia stock? Is it a good buy at the current price? Please share your opinions with us in the comments section, and don't forget to let us know what you think NVDA is worth. If you're interested in learning what other companies, like Nvidia, have been up to lately, click on the next video on your screen. We'll see you there.